Over the last week, we've seen the winning streak for interest rates come to an end at a time when the Fed says that it's starting to shrink its balance sheet. And a lot of people believe that as the Fed shrinks their balance sheet, interest rates are going to continue to rise. And if that wasn't enough, Yellen came out and said that she was completely wrong about inflation, while JP Morgan says it's bracing for an economic hurricane. So in today's video, I want to talk about the rise in interest rates in a little bit more detail, as well as the idea of inflation and how it's likely to affect house prices as we move through 2022. Unless you've been hiding under a rock, you know that interest rates have risen nearly 3% since the beginning of the year, which has caused a 42% increase in buying power. It's affected affordability to no end, which is why you've seen mortgage demand drop to its lowest level since 2018. There's less buyers out there looking to buy property because of affordability. And I've had many of you comment on my videos saying that you're seeing properties sit on the market a little bit longer, you're seeing price drops in your market. So I want to talk about the idea of increasing interest rates along with inflation not being under control is likely to affect house prices as we move throughout the rest of the year. Before we do that though, I'd like to ask you to hit the thumbs up. You know, it helps the YouTube algorithm, it helps people see the video. And after you do that, I'd love for you to comment and let me know what you think about rising rates, about inflation, and how it's going to affect house prices through the rest of the year. So we know that interest rates have affected affordability. As I mentioned, a 42% increase in payment. But what does that actually mean? Well, if you wanted a $4,000 a month payment, if that's the number that you were comfortable with, at a 3.5% interest rate, which is where we were at the start of the year, you could have purchased a property just over $1 million with 10% down. Whereas of today, you're purchasing a property that's under $800,000. And for many buyers out there, you know, in my experience, when they're looking at buying property, they don't look at $1 million properties and then all of a sudden decide to start looking at $800,000 properties. Those buyers either stretch themselves and make that payment work, and or they sit on the sidelines and they don't buy anything, which causes demand to slow. And that's exactly what we've seen. And that's why we're seeing properties sit on the market a little bit longer, is because buyer demand has shrunk. There's less buyers out there being able to afford these properties. And while we've seen buyer demand drop, we haven't really seen it affect housing prices to any substantial degree. You know, I've talked about, I've seen house prices be reduced, but it's usually on houses that were overpriced to start with. It's on, you know, properties where sellers tried to price it higher than the last comparable sale versus maybe where the last comparable sale sold. Even though that last home sold for higher than it should have, you still have sellers trying to stretch that price. And that's where I'm seeing many of the price reductions happen. I mean, I recently did a survey on my channel and nearly 50% of you said you haven't seen any real change in house prices at all in your market, whereas another 25% said they've only seen a 0 to 5%. So as you can see, the housing market as a whole is staying pretty stable, which is what I talked about in a recent video about the deceleration in home prices. You're likely to see home prices just not appreciate at the level that we've seen over the last couple of years, which is completely normal. I mean, you can't continue to see the growth that we've seen over the last couple of years continue forever. So this deceleration in home prices, this pullback in home prices is normal. You know, it's kind of like the recession that we're likely headed into. It's, you know, letting some of the steam out of the market. You need those pullbacks. And like a recession, you know, a recession is an environment where you have a pullback in GDP, if you will, right? You have 2 quarters of lower GDP, or you have 2 back-to-back quarters of lower economic growth, right? That is what a recession is. And I think we're likely headed into one. And I want to spend a little bit of time and talk about what that recession likely looks like with regards to house prices and how, you know, rising interest rates and inflation that can't really be tamed at the moment is going to affect the housing market. Now we know the Fed has come out and said that they want to control inflation. In fact, that's their primary job, is to control inflation along with employment. And employment is at its lowest level in nearly 50 years. So the employment piece is there, but the inflation piece is completely out of control. And so the Fed has come out and said that they're going to continue to do these 50-point basis hikes over the next couple of months to help control inflation. Quite frankly, it's going to help, but I don't know that it's really going to get it under control. Here in Los Angeles, we've seen gas prices as high as $8 a gallon. At the same time, you've got rising food costs, you've got rents out of control in many markets out there, which tells me that the Fed is not likely to control inflation unless they get interest rates higher than the rate of current inflation, which means they would need interest rates higher than 8.5%, maybe even as high as 9% to control inflation. And that's not going to happen. I've been wrong about interest rates in the past rising as high as 5%, but there's no world in which interest rates can go to 9%, which says that inflation is likely to stay high. Along with that, we're likely to head into a recession in coming months. And I want to talk about what that means from a buying standpoint. What does it look like with regards to house prices? So we've talked about how interest rates affect affordability. Well, inflation erodes buying power. And if you've got rising interest rates and you've got inflation out of control, you kind of have a double-edged sword when it comes to what can a buyer afford. Now we're coming out of an environment with very easy monetary policy, a lot of cash, flush in the system. A lot of businesses have done very well over the last couple of years. So a lot of people are feeling, pretty good about where they stand. But as inflation continues to stay high, it's going to continue to affect consumer spending. And as it affects consumer spending, I think that is going to put the brakes on some potential home buyers out there buying property. Because in a recession where people are going to get laid off, and now I don't believe the layoffs are going to affect, the global economy and create this massive crash or anything like, 2008. That was a completely different environment, and we've talked about it in many videos. Recession is going to affect people's buying power. And with interest rates staying high, I think it's going to affect affordability even more, which makes buyers just want to stay put because they're not going to feel safe. They're not going to feel confident about the future of the economy. So they're going to want to just stay put all at a time when sellers or homeowners out there have locked in interest rates in the low 2-3% range. So many sellers out there have a very low mortgage payment that they're just going to sit on. So as cost of food continues to stay high, gas prices continue to stay high, the one place people find comfort is in their home. And the one thing people need is housing. So if people need to cut things, they're going to cut ancillary expenses, cable, subscription services that they're not using, maybe even the gym, stuff like that. But they're not going to cut housing. And they're not likely to sell their houses because they can't go find something less expensive than what they're currently paying because of how low their current interest rates are. So that means supply is going to stay limited. Now, you are going to have some people that are affected because of rising costs. Maybe they're laid off, the impact of inflation on their finances, their budget is pushing them to a point where they can't afford that property. They're going to need to sell it. So that's likely to create some inventory. But I believe the overall environment is if you don't have to buy or you don't have to sell, you just stay put, which means the housing market isn't likely to see a big shift in regards to supply and demand. Yeah, demand is going to diminish a little bit, supply is going to build a little bit, but because of how low supply levels are on a nationwide scale, you're likely to have house prices stay pretty strong. But there are going to be sellers out there that need to sell. So if you're a buyer out there and you're determined that you're going to buy this year, those are the properties you watch out for. The ones that are sitting on the market, the ones where they're doing big price reductions on. Maybe there's an opportunity out there as a buyer to get a property for less than market value. But I don't believe a housing crash is coming, even with rising inflation or inflation staying high and potentially rising interest rates. I think the housing market as a whole is one of the strongest sectors because it's a fixed asset. You have a fixed payment, and that's extremely important in this environment. As all the other costs are rising, if you have a fixed mortgage payment or a fixed return as an investor, that's something that brings you safety with regards to your finances. But I do believe there's going to be a mindset shift in how inflation affects people as we get through the summer, right? There's a lot of vacations planned at the moment. There's a lot of people out there still feeling pretty good with cash, but I feel like as their cash gets eaten up by rising costs and continues to do so, and no more free money is thrown into the system, these people are going to start to feel the effect, which is going to create more opportunities for buyers out there. But like I said, I think sellers stay put, and I think unless you absolutely have to buy or sell, you're probably just sitting on the sidelines, which means the housing market might stall for a little bit. You might see more sideways movement than you see up or down movement. But one thing to keep in mind in these environments during a recession, builders are also affected, which means builders are likely to back off building, supply, which means that, the supply demand imbalance down the road is just pushed further down the road. So once inflation gets under control, economic recovery happens, the Fed starts pumping money back into the system, which is going to happen at some point in the future. It always does. They pump the brakes too hard, sends the economy into a recession, which is what I expect to happen. And then they back off, that policy and provide that easy monetary policy again. And then you have this growth in the system again. That's essentially the business cycle. You have the growth, then you have the recession letting the steam out, then you have the growth again. And that's usually a 3.5 year cycle on the growth side and about 11 months a year on the recession cycle. Well, what we've seen over the last 10, 11 years is a lot of growth with very little pullback. But as inflation continues to stay high, a lot of that money is likely to be eaten up, causing buyers to be a little bit more cautious, a little bit more weary, creating less demand, allowing that supply to build, easing the housing market. So those are my thoughts at the moment. As the Fed comes out and releases new statements and follows through or doesn't follow through on what they say they're going to do, that's going to have an impact on both interest rates, on inflation, on housing prices, on the housing market, all of that stuff. So a lot is to be determined out there. But as I read, as I watch the market, boots on the ground, selling property, helping buyers and sellers, I'll continue to update you. But if you're watching this wondering when will interest rates peak, I filmed this video just a couple of weeks ago. So do me a favor, check it out in more detail. Leave me your thoughts in the comments below. But for now, I appreciate you watching. I appreciate your time. Hope to see you again soon. Have a great day. Bye-bye.